Hey guys, my name is Fyzee and this channel is about finance and investing, and today we're looking at Cirralto, ASX CRO. This company is all about providing payment and transaction solutions to businesses in a B2B environment, so payments can be made between businesses with efficiency, speed and accuracy. And the big focus of this company is about solving the pain points between the suppliers and the businesses, and in this video we're going to explore its recent share price, what they do exactly, its financials, and my personal opinion on the stock. Now, before we begin, this video is not financial advice. I'm not a financial advisor. We are speaking in a very general sense only. I just have a passion for investing in finance, same as you, so let's get into it. So let's start off with the stock price, and we can see that it's currently trading at about 9 cents. And looking at the 6-month return, it is actually quite phenomenal at about 125%. We can see that there was a bit of a spike back in mid-February where the stock price shot up about 86%, which is quite insane. And looking at the stock price growth, it seems that most of the effect has just happened in the last year. The company at the moment sits at a market cap of just under 200 million, and let's look at what they actually do. So as we spoke about in the intro, Cirralto is a transaction services business supplying industries with a broad range of B2B payment services, digital trading software, and integration solutions. They deliver a fully integrated digital payment and business software solution that enables businesses to transform with ease, error-free digital efficiency. So essentially, Cirralto wants to streamline business-to-business payments by implementing their software to make it very easy for businesses to send and receive money. Now, at the core of Cirralto, what they basically do is that they are a business payment services provider, or BPSP for short. Now, if you guys didn't know, a huge problem in Australia is the fact that 53% of all invoices are paid late, 20% are the wrong amount entirely, and 20% are paid to the wrong account. And these stats are straight from Xero, which is a company that provides accounting software, so we know that it's pretty accurate. Now, even if we compare Australia globally, we can see that on average, Australians pay 26.4 days late, compared to 5.85 days late in the UK and 6.5 days early in Japan. Now, since these payments are being paid very late, businesses often have to go to banks and take out very expensive invoice financing solutions just to keep the cash flow going. And essentially, it just ends up costing the business way too much, and it's very unnecessary. And of course, this has flow-on effects where the business loses its profitability, performance, and the overall health of the business suffers. Now guys, to be honest, I have no idea how we got here in the first place, but this is a fundamental problem that needs to be addressed. And this is where Cirralto comes in to make things easier and simpler. So when it comes to the company's competitive advantage, we can see that their software enables customers and their customers to do business better, and they enable multiple invoices to be paid in a single transaction, which saves a lot of time and it saves a lot of hassle as well. And for their customers, Cirralto tries to broaden payment collection options and improve customer cash flow. And at the moment, Cirralto is playing in a $100 billion Australian B2B payments market. So let's have a look at how they actually make money to begin with. Now, one of Cirralto's core offerings is Spender. Now, as you guys can see that throughout this value chain between the manufacturer, wholesaler, retailer, and consumer, we can see that Spender Collect is being utilized, and at the end between the retailer and the customer, Spender Pay is being used. So what happens is that the manufacturer sells 1,000 cups at $1 each, then the wholesaler pays $1,000 via Spender Collect to the manufacturer, and so on, and each time Spender Collect and Spender Pay are being used. Now this is quite good because Cirralto is involved in every stage of the process, and this forms a more holistic solution across all different stakeholders. And the good thing is, since Cirralto is involved at every stage, we can see that each time they collect on average 1.5% as a merchant fee, and we can see that from the consumer to retailer right here, 1.5% of $2.60 is 3.9 cents, and so on between retailer and wholesaler, wholesaler to manufacturer, and so on. So great, they're involved at every single stage, but why would a customer and a supplier want to use Spender and Cirralto in the first place? Let's have a look. Now, if we look at this from the customer side to begin with, it gives them flexibility because they can pay using their credit cards, and even if the supplier doesn't actually accept credit. It also enables customers to make batch payments. It gives customers a payment passport, which means that they only need to update their payment methods once, and Spender will use the new payment method every single time rather than the customer updating this manually every single time. And for suppliers, Spender automatically annotates the bank statements for them, so it's easier for suppliers to quickly reconcile payments. Through open banking, they can onboard people much quicker and complete the relevant AML and KYC checks quite efficiently. And there's other benefits as well, like intent to pay and workflow payments. Now, we've spoken about Spender quite a few times, and in this slide you guys can see the full suite of Spender, and this includes products for payment solutions, inventory management, procurement, e-commerce, and so on, so it's a massive offering. Now, recently Cirralto has signed a BPSP agreement with Visa, who we all know, and Fyzee, which is another financial services company based in America. And because of this arrangement, this is going to increase Cirralto's margins on digital payments by up to 40%, which is insane. For a business that processes so many transactions, this is quite beneficial. There's also going to be some business model enhancements, and this is going to complement the existing agreement with Fyzee that they already have. And generally speaking, this should streamline the business and offer additional services like e-invoicing, e-payments, financing services, and so on to assist even further. Now, through this intent to pay framework, we can see that the supplier sends a statement with offer for extended payment terms to the customer. Then the customer accepts the offer. Then it goes to the funder, and then the funder just pays the supplier immediately, as you guys can see. Then the funder sets up a direct debit agreement with the customer, and then the customer makes regular payments to the funder to complete the transaction. Now, the only thing that I can see in this which causes a bit of concern is that Spender/the funder is funding this arrangement. So if the customer refuses to pay or doesn't end up paying altogether for whatever reason, the credit risk falls on this party, which may cause issues. At least that's the way that I'm looking at it, but what about you? Now, let's go into the numbers and financials for this company, but before we do, if you guys are finding value so far, please leave a like and subscribe, it really helps out. Now, looking at the quarterly revenue growth, we can see that it's growing in a linear trend, and it has roughly tripled in about 6 months. And looking at the average revenue per user, or ARPU, we can see that it's had a phenomenal increase towards the back end of 2020, where ARPU increased by literally 400% in just 4 months, which is just crazy. And as new customers hop onto CRO's platforms and systems, we should see this number go up even more. Some other figures that we can see are that $2.2 billion were processed in transactions by Cirralto's software, and the total addressable market for Cirralto is $225 million, which is quite huge, and there has been a customer growth of 42% as well. Now, diving into the profit and loss for this company, we can see that there has been a solid increase in revenue from 270k to 629k, and this is a solid increase of more than 230%, and they've kept the cost of services in check as well, and it's gone up by a very tiny proportion, as you guys can see. And there's also some other income of 95k, but we'll look into this in just a second. Now, if we look at the company's expenses, if we compare them to the previous year, and they haven't really increased by too much, and we can see that this resulted in the decrease in the loss by nearly 1/3, which is quite good. Now, once again, companies that are turning a loss are not in the best position possible. However, with a lot of stocks, we can see that the market will still reward them because they expect the company to do well in the future. In the case of CRO, we know that there's a huge problem with payments being paid late, and their target market is quite huge. Therefore, the market is happy to pay for this stock. But there needs to be solid cash on the balance sheet to make this sustainable, so let's have a look. Now, straight away, we can see that there's a huge cash increase from $273 to nearly $4 million, which is quite good. And current assets across all items have increased, which is quite good to see as well. And that's the same story with non-current assets as well. Now, looking on the liability side, we can see that they've made a conscious effort to pay down debt, and we can see that the financial liability has basically been wiped out, and trade and other payables have decreased as well. So judging by the balance sheet, they seem to be in a pretty decent position. In fact, if we look at the current ratio of this company, it is currently 7.3, which is pretty strong, and they seem to be ready for growth. Now, if we compare this to the previous period's current ratio, it is 0.28, so there's definitely been a huge uplift. Now, looking at the last statement, which is the cash flow statement, the receipts from customers has increased slightly at about 9%, but payments to suppliers has gone up quite a lot more at about 53%. Now, this is where I have a slight issue, and I want your thoughts on this as well. We can see that the government grants of 150k have been applied as well, but we can't really count that since it's very external to the business, and laws, incentives, and all these things change all the time. But even if we count this into the calculations, the cash flow from operations is getting worse, which I'm not too comfortable with. And the main inflow of cash has come from the capital raisings of $5.7 million, as you guys can see, not from the actual operations itself. Now, I fully understand that these guys need the cash to fund their expansion, which is fine, but seeing the current composition of where the cash flow is coming from, it seems a bit risky at the moment. Now, looking at the other income that we just spoke about of 95k, we can see that the bulk of this income has come from government subsidies, and once again, this is pretty external to the business, therefore it's not very reliable. Now, my thoughts on the company and looking at it overall is that Cirralto definitely has an opportunity on their hands, because we know that people are paying late and they're paying to the wrong accounts, and this is a proper issue in Australia, so the market is definitely there. I mean, from my own personal experiences, I've dealt with many customers who run businesses and they have payments which are paid late to them, and this causes a huge issue when it comes to cash flow. Now, a couple of months ago, I had an interview with a company who was looking to solve this problem as well. So I can say that from first hand, this is a real issue in Australia. However, when looking at the financials and looking at the cash flow and P&L, it's still negative right now, and for me personally, it's too early to invest in the business. We need to see more traction with CRO's offering, and based on how they're going, if they can execute on what they've said, they should be able to reach it, because they do have a lot of room to grow. Now guys, at the end of the day, this is still a very highly volatile penny stock, and even a little bit of a hint of bad news can send this stock just crashing down. And same goes for any good news as well. It can send it skyrocketing, generally speaking. So for now, I'm going to keep this on my watch list, just like I have Doe and EML payments on my watch list right now. These two are also very high growth companies, so go check these two videos out. And guys, please like and subscribe, and I'll see you in the next one. Bye now. It can send it skyrocketing if it can send